Hi, my name is Allan Madan. I'm a chartered accountant and a tax expert in the Mississauga, Toronto, and Oakville regions of Ontario, Canada. Today's short video is called Smart Tax Strategies for Investors. So let's get started. The first smart strategy for investors is to leverage. Leverage simply means borrowing to invest. Interest paid on money borrowed to purchase investments that produce profits are tax deductible. Investments on which interest is deductible include, but are not limited to, mutual funds, stocks and shares, bonds, and real estate investments. You'll be quite surprised how far an interest expense deduction can go on your personal tax return and save you tons of money. Leverage also increases your internal rate of return because you're using other people's money, like the banks, to invest. The second smart tax strategy is called buying low tax investments. What does that mean? Well, low tax investments are those that don't result in a lot of tax on the profits earned from those investments. Let's look at an example. Assume you earned $100,000 in profits from your investments. There are 4 different types of ways to classify that profit. If the profit is earned as interest, then you'll be left with, according to the chart in front of you, $54,600 in profit after tax. Dividends, $70,000 after tax. Capital gains, $77,000 after tax. And return of capital, a whole $100,000 and no tax. So as you can see, return of capital is a very low tax rate investment. In fact, no tax, whereas interest is a very high tax rate investment with a lot of tax. As a smart investor, you want to purchase low tax rate investments so you end up with more money once taxes are paid. The third smart tax strategy for investors is to buy high tax rate investments inside a tax-free saving account, or TFSA. As the name implies, profits earned inside a TFSA are not subject to taxation. So it makes sense to earn high tax rate investments inside a TFSA and put low tax rate investments outside of a TFSA. The fourth smart tax strategy for investors is to loan money to your spouse and income split. Let's take an example. Assume that you are in a very high tax bracket and your spouse is in the lowest tax bracket. Further assume that you are earning $50,000 in investment income. Wouldn't you rather have that investment income taxed in your spouse's name and not yours, so you pay less tax overall? The answer is obviously yes. So how do you do it without getting yourself in trouble with the CRA? I'll tell you. Number 1, lend money to your spouse. Number 2, charge interest at the current specified rate as determined by the CRA, which is at an all-time low of 1%. Number 3, your spouse uses that money borrowed and purchases an investment that yields profits. Number 4, the profits resulted from the investment will be taxed in your spouse's name. And presto, you pay a lot lower tax because the investment income is taxed in your spouse's name, not yours. The fifth smart tax strategy for investors is to purchase flow-through shares. Flow-through shares are investments in resource companies that are involved in exploration and development activities. The initial amount of the investment in a flow-through share is completely tax deductible to you over a period of 3 years. In fact, about 90% of the deduction is received in the first year alone. In addition to the tax deductions, you will also receive an investment tax credit, which reduces your taxes payable of about 30% of the initial investment. So let's get this straight. Not only do you get a tax deduction for the initial investment, you also get investment tax credits, which further reduce your taxes payable. That's why investors love flow-through shares. Thanks for watching this video. I hope you found it useful. Please like, subscribe, or comment on my videos. Your feedback really helps me produce better and greater videos. Finally, Get access to your free report, 20 free tax secrets on how to beat the tax man, the link for which is shown at the end of this video. Also, go to my blog, the link for which is shown at the end of this video, to get more great tips and tricks. Thanks for watching, and see you next time.